Hey guys, and welcome to the Working Money channel. Boy, retail really has been flushed out. Retail social media interest is scraping the bottom. This coming from Chad Steingraber here. This will reverse, he says, and retail will come flooding back as prices are already rocketing up. So this is the social media sentiment for the crypto space. Indicator dashboard, historical social media metric risk. So in the past, what we've seen, and this is so interesting because over 2 cycles, I can directly tell you that social media views or impressions, like YouTube views, are directly correlated with price activity. And you guys can see that in there at the top of the market in 2017. We saw it, and back in 2021, we saw it as well. But guys, look at where we are today. It feels a bit toppy. However, social media sentiment is at new record lows, and I'm sure a lot of crypto social media influencers could tell you the same. This is why this particular crypto cycle has been very strange. It's been very different, but guys, it's looking as though the tides could be turning. Over the last, we'll call it roughly 24 hours or so, we have seen an increase for Bitcoin of about 4.5%. Now, that does not sound like a lot, but guys, that's what's going to get the ball rolling. Right now, we're seeing Bitcoin flirting with this former level of support in around $106,000 per coin. And so there's still a lot to do here. This region in here is actually going to be a tough nut to crack. I'm going to call it roughly 110 to 111. So in and around here, guys, this is kind of like the big test. This is really where we're going to know if Bitcoin has enough steam to get up even higher. So what we could see Bitcoin, no, not an arrow. I want to brush. We could see, so it's calming down in and around here. Hopefully we do see another push. I have a feeling we're going to see a lot of sideways action in there. It is still only November the 10th. We could theoretically have another month of bullish activity, a Santa rally, bringing us into the new year. And for more information on where I see this market going, you guys can follow me at patreon.com/workingmoneychannel. There's so much to be paying attention to at this moment, and I'm keeping my eye on the prize, letting my Patreon subscribers know where I'm going to be cashing out, where I think the top of the market is going to be. Follow me if that's something you guys are interested in. We're also seeing fear and greed slowly rising. So fear is now at the top end of the 20s, where it was in the mid-20s before. We got market cap up by almost 5% today. That is good news. Average crypto RSI is starting to move in the right direction here. We're getting near the overbought territory, so it's at 57.36. That is good news too. That means a lot more people are purchasing cryptocurrencies, altcoins specifically. A lot of the top cryptocurrencies are doing fairly well too. Bitcoin up 3.93. We got Ethereum's even up 5.43. XRP, guys, up 11.88%. So XRP has been one of the top gainers, at least as of now. Let's bring up XRP just to show you guys what we've been seeing over the last 24 hours roughly. XRP did go up almost 14%, 13.78% in roughly the last 24 hours. Currently, it is sitting in around 12.5% to the upside, and we're seeing one XRP going for about $2.54, a far cry from where it was just yesterday at $2.27, give or take. So, guys, we're seeing a big pump for XRP. I mean, are you really surprised? We were coming out of what was looking like a double bottom pattern, did dip down a little bit more before shooting to the upside. So all very good news. Of course, this has to do with Bitcoin. And I got to give some credit to the government reopening. This is definitely giving crypto momentum a bit of a push here. Senate Democrats have caved, now opening a path to reopening the government. This definitely has to do with why we're seeing more confidence in the crypto space, and I'm sure stock markets will open today as well to the upside. The Senate took a massive step forward on its way to reopening the government on Sunday, with a group of Senate Democrats caving and joining Republicans in their bid to pass a revamped plan to end the shutdown. Signs that the shutdown, which entered its 40th day, could be ending became more and more clear as the day went on, particularly with the unveiling of a bipartisan package spending bill that lawmakers hope to attach to a modified bill to reopen the government. 8 Senate Democrats crossed the aisle to mark the first step in the GOP's quest to end the shutdown. Many of the lawmakers that splintered from Senate Minority Leader Chuck Schumer were among those engaged in bipartisan talks over the last several weeks. So, gives a list of the defectors here. The good news, guys, is that government is reopening. That is essentially what we need to see in order to see risk on assets move to the upside. And, we are already starting to see that in the crypto market. Again, markets are not open as I'm recording this, but you guys can see this is the S&P 500 on the hourly. It closed on Friday at about 670, and you guys can see the pre-market open is at 677.58. So already opening above Friday's close. That is also good news to see. So bull theory here, summing it up. U.S. government shutdown is finally ending. Senate just voted 60-40 to end the government shutdown. That means within days the government will reopen. And here is why it matters. Okay, the TGA balance is sitting near $953 billion. Once the shutdown ends, Treasury spending will push this liquidity into the market just as the Fed prepares to end quantitative tightening in December. So guys, more liquidity will be entering the market, at least theoretically, bringing the prices of cryptocurrencies and other risk-on assets up. So this could just be the front run of something even more beautiful to come. Historically, every time TGA spending and Fed easing align, risk-on assets rally. With the SEC back to work, pending altcoin ETFs could move forward again as well. Pro-crypto bill stuck in Congress are expected to pass once legislative operations resume. So this means the physical taps are reopening, monetary tightening is ending, crypto regulation will accelerate. In short, liquidity is coming back to the market. And Donald Trump did also comment on the state of the financial system. And now the government is reopening. Hopefully we can get back to work.
Many Americans are unaware that behind the scenes, the technical backbone of the financial system is decades out of date, many, many years out of date. You know that. Paul and others are straightening it out, but payments and money transfers are costly and take days or even weeks to clear. Under this bill, the entire ancient system will be eligible for a 21st century upgrade using the state-of-the-art crypto technology. Who would have thought we would have been saying that 2 years after?
State-of-the-art crypto technology is what's going to take over. And, of course, positive CFTC news is going to be more bullish for cryptocurrencies, this courtesy of Michael Branch. As news continues to come in that government shutdown in the United States is coming to an end, the interim CFTC chairman announced that they are in talks with exchanges to launch spot cryptocurrency services. So this just came out as well. The U.S. Commodities Futures Trading Commission, or the CFTC, acting chair Caroline Pham announced that the agency is in talks with registered exchanges to launch spot cryptocurrency services early next month. So early December, guys, keep your eye on the prize. Pham noted that these discussions not only involve major exchanges like the Chicago Mercantile Exchange and the CBOE Futures Exchange, but also brand new companies like Coinbase Derivatives, Kalshi, and Polymarket US. So over here it says the talks reportedly cover the launch of various spot cryptocurrency trading products, including leverage products. And here's a quote: "We are continuing to work with Congress to bring regulatory clarity to these markets while also using our existing authorities to swiftly implement the recommendations of the President's Digital Asset Markets Working Group report." This move by the CFTC was interpreted as signaling a significant shift in the approach of U.S. regulators to cryptocurrency markets. Rather than waiting for Congress to give the CFTC explicit authority over spot crypto markets, Pham is taking advantage of existing provisions in the Commodity Exchanges Act that require retail trading of commodities with leverage, margin, or financing to occur on regulated exchanges. So this is a step in the right direction as well. We also got news here. This is just a screen grab from a Fox Business report, courtesy of Mr. Mann here. Paul Atkins, okay, the SEC chair. This is apparently what's on the SEC's agenda as we do see government reopen. Okay, so regulatory recalibration. Investor protection meets innovation, digital assets and innovation exemption. So we're looking at digital assets being looked at more closely here and likely being exempt from some of the stringent regulations that was put upon them before. Capital formation, expanding access to private markets, modernizing market structure. So these are all things that they're going to be focusing on in the coming weeks as well. I'm happy to see this because this is likely going to mean that the cycle will continue into 2026. Colin Talks Crypto posting this. I think the cycle goes into 2026. So his opinion is that it will this time, and that's what's going to fool a lot of people. That's his base case, but we've never done that before. Remember, Bitcoin has already done something this cycle it hasn't done before. It dropped below the previous all-time high of $20,000 when it visited $15,700 in the most recent bear market. There's something different about every single bull market. I'm just saying it's not as impossible as some people make it sound. Everything about this cycle has dragged out longer than typical cycles. alt season has taken longer to start than usual cycles as well. So I think there's a decent chance the whole cycle drags into 2026. And if I'm wrong, I'm going to delete this post. Just kidding. I'll own it, he says here. So Vandal here responding, you make a good point, but I'd like to note that even if the cycle extends into Q1 or Q2 of 2026, that does not mean the cycle is broken, nor does it mean it's no longer a 4-year cycle. It just makes the cycle slightly right translated or extended. I say that because if we measure cycle low to low, that would assume the next cycle low will be Q4 2026, meaning we'd have to peak very soon or a few months from now at the most, then a decline, and then finally bottoming sometime near the end of 2026. In other words, we won't be able to fully confirm what type of cycle this is until the end of the cycle of next year, and we'll have enough information to draw data-backed conclusions. Nonetheless, I appreciate your great work. So other things to consider when looking at a quote-unquote 4-year cycle extending, or some are suggesting maybe it's turning into a super cycle. So wanted to thank Colin Talks Crypto, wanted to thank Vandal, Mr. Man here, Michael Branch, of course, Crypto Russ, Bull Theory, as well as Chad Steingraber for that first tweet. So sentiment is changing, guys. We are seeing more excitement, I think, starting to blossom through in the space. Rect Capital posting this. Bitcoin is still enjoying support at the 50-week EMA, so that is the purple line as we approach the end of the week. So he just posted this yesterday. If you guys are watching this video on the day that I'm releasing it, it is Monday, November the 10th. Yesterday was Sunday, so end of the weekly cycle. Downside wicking, as you guys can see in here, okay, below the 50-week EMA is fine as long as price weekly closes above the EMA for what would be the first low in its cluster of lower lows. And if I just bring up the Bitcoin chart here, I'm going to show you guys 50-week EMA, very important. I'm just going to throw that on the weekly, add an indicator here, EMA, moving average exponential, and I'm going to double click on that, add a 50 time frame on there, and as you guys can see, I'm just going to zoom in for you guys there. As you guys can see, I'm just going to remove some of that. As you guys can see, we did wick down below, but this week is starting off bullish. So every time, and I talked about this a little bit yesterday too, every time we did see that, it did wick down or could wick down. It doesn't necessarily have to wick down before a new move to the upside, a bullish trend in an upward direction. So hopefully this means we will see some more bullish activity. So wanted to thank Rect Capital just for sharing that with us. Bitcoin looking very impulsive on this push up. So guys, this is great. Skykadelic saying we have to break up above 106. I kind of covered this already. Then we have to go 108 to 113. My predictions here for Bitcoin are not predictions so much as the levels we do have to surpass. I think 111 is going to be very important. And then, of course, 116 up here is the next logical step, 116.3, give or take. So those are the next two resistance levels that we have to break up against. Of course, there still is time, and sometimes these things can move very quickly. I just wanted to bring this up too because Jake Claver recently did an interview with Nancy Beaton of Uphold, okay? Uphold just launched the ultimate XRP banking system, 10% cashback XRP loans, and a digital dollar. We're going to go over some of these points. Here is Nancy Beaton of Uphold. Listen to this.
So we hear that on a regular basis from all of our friends in the community. So on the first side on the debit card, so we did relaunch the debit card and we are offering up to 6% back. So it's a better reward than you will find in the market. It's on all the spending, so it's not on any sort of complicated category scheme. And so you can use the card everyday spending. You can spend your crypto, you can spend your fiat, you can spend stable coins and earn the up to 6% back. So that's first.
Awesome.
We do couple that. So if you also want to direct deposit part of your paycheck into Uphold so that you can either spend it on the card or trade, you will get another up to 4% back in XRP. So you could be earning up to 10% back in XRP every month. Some really good news that we have, we're going to be bringing to market in fourth quarter in partnership with the protocol, the Exactly protocol. What it will allow users to do is that they can lend their assets to a pool and they can earn yield on those assets. They can also contribute their assets and get a credit card and spend against those collateralized assets. So you don't have to, spend your assets or liquidate your assets. You can earn yield or you can spend against them. And this will include XRP. So we're going to trial it in the fourth quarter and test it, and then we'll roll it out in fourth quarter to the majority of our users.
That's awesome. What type of rates? Because I know people are going to ask me after this. What are we looking at there? Did you all define that, or is it still kind of up in the air?
Yeah, it is classically a DeFi lending pool, so the rates can change, but they are definitely on the lending side, a way to earn yield that you haven't been able to before. So, but on the borrowing side, it is much lower than a traditional bank, and you're able to just pay it back in clean installments. And then you can just leave your, your assets on the pool and continue to borrow against it. You can do it one time. You can continue to keep your credit card. So it's real flexible, but you'll earn more and you'll borrow for less.
You guys have a money market, is that right? That you're able to also, if you had cash, it's insured up to $2.5 million, earning a pretty good.
Yeah, so that's also right. So if you want to put your fiat onto your US dollars onto Uphold, you can earn interest. It's a US high interest account, right? So you can earn 4% now on your US dollars on Uphold. That's better than I'm getting at any local bank that I have here or any online bank. So I feel like, put your dollars on Uphold, earn the 4%. The great thing about it is it's FDIC insured, and it is $2.5 million FDIC insured. For those of us in the US, typically, you get $250,000 at an account at a bank. But what this does is it sweeps it across 10 different banks. So you can have up to $2.5 million FDIC insured, earning 4% on Uphold.
So you can see why banks are getting scared. The cryptocurrency industry is just kind of accelerating what can be possible from a crypto exchange versus your bank, your traditional bank. And banks aren't liking this. Think of all the interest you can make from holding your coins on Uphold. And now they're FDIC insured, as Nancy Beaton did say here. This is changing the game big time. Up to $2.5 million can be insured because they blanket it over several different banks. It's better than most banks, and it's instantly liquid for trading when markets do eventually move. So people are going to start thinking, especially people investing in cryptocurrencies, they're going to start thinking about how they're going to be custodying their dollars as well as their cryptocurrency. And now Uphold is giving us a new option for that. So wanted to thank Diana and of course Jake Claver for that interview. There's a reason everybody's focusing on XRP. What 1,000 XRP coins will be worth in the year 2026. The moment the SEC approves the ETF, guys, everything is going to change. Now I happened to see this video. It took me a second, but I did realize there that it is AI generated. The information is solid. I don't know why they would generate an AI video. So this is not any specific expert or professional. I do want to mention that. The information in this video is very interesting. Listen to this.
This is why the XRP ETF is such a big deal. Because here's how this plays out. The moment the SEC approves an XRP ETF, everything changes. Wall Street gets a green light to allocate. And if you think they're going to miss a chance to buy an asset built for global finance under $10, think again. That ETF demand will absorb supply at an insane pace. And unlike Bitcoin, XRP supply is actually shrinking through every transaction via the burn mechanism. XRP is designed to get more valuable with use. Now couple that with Ripple's RLUSD pushing more volume through the XRPL, and XRP's value engine becomes exponential. Think of it like this. RLUSD adoption, volume, bridging, XRP burns, lower supply, plus ETF demand, explosive price action, and yes, we're seeing it in real time. $500 million in RLUSD in 6 months, 604% growth, second fastest growing stablecoin globally. And Ripple's just getting started. Now here's the part few are talking about. Ripple didn't even need to build RLUSD. They were already solving cross-border payments using other stablecoins and XRP. But they realized something powerful. Owning the stablecoin layer means controlling the velocity of volume across the entire ledger. And volume harks power. Because if you're moving billions of dollars across a decentralized ledger, you decide the rules of engagement. You can optimize the flow, you can maximize efficiency, you can extract the most value, and deliver it to XRP holders through reduced supply and increased relevance. That's the game Ripple is playing. They're not just building a coin. They're rebuilding financial plumbing for the 21st century. And once that becomes obvious to Wall Street, to regulators, to everyday investors, the floodgates open. Let's zoom out.
You can see how somebody fed the text into this video, and this generated video model here kind of stumbled on the text, but I think the content, the information is sound here. When you think about XRP and Ripple, especially in terms of why they created the RLUSD, being able to control the velocity and make sure that they do have control once we do see billions, if not trillions of dollars flowing over the XRP ledger. This is all part of the game, guys, and Ripple has been playing it perfectly so far. That's just my opinion, and for more opinions on where I think this market's going to go, you guys can follow me at patreon.com/workingmoneychannel. I want to also mention that the Working Money Channel merch store is up and running. If you guys are interested in purchasing some Working Money Channel merch, I got some great items here. Link is in the description of the video for you. That's just my opinion. I want to hear what you guys think. Please subscribe to this channel if you haven't already. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.